Hi everybody, Alex Employer from Expert Forex, and in today's video we're going to be looking at the search for the perfect robot. And this is a second video in the series. I'm showing you the skills that you need to find these fantastic robots. So please go and watch the first video in the series. It's about how I turned a loss-making EA into a 15 million EA. Please go and watch this, because in it I describe the skills that you need to do exactly what I did there. And we're now going to move on to refining those answers that we got to create robust results. And when I talk about robust results, have a look at this slide. It shows more or less what we're looking for in the perfect robot. And what we're looking for is an equity chart that just goes up and up and up. Now this particular equity chart is a good one because the blue line is the account balance and the green line is the equity chart. So the equity actually is above the balance all the way. Can you see how steadily this balance is growing? It had a bit of a hiccup and then it's steadily grown, bit of a hiccup and then it grew again, and look how steadily the growth periods. So these are robust settings that make profits on a continuous basis. Fantastic. And you can see that over this period, over 480 trades were made. So it's not just a fluke of a couple of trades there. This is a very sustainable one. And the returns have been fantastic, over $100,000 on a 10,000 starting amount. 1,000% return. That's the type of robot we're looking for, and I'm going to show you how to find these robots. And the secret actually lies, I'll tell you straight up front, is finding these equity charts that just go up and up and up, straight up all the time, and only have a now and then a hiccup, but continue going up. This one also has the advantage of really a good success rate, almost a 90% success rate. Now you might think that equity chart is an exception. There are lots of robots that have those kind of equity charts, some smooth, some not that smooth, but they all have the same trend, all going up nicely on a steady basis. There you can see all the equity charts, and these are equity charts that are already available. They are EAs that we are already trading, and people just are not finding these equity charts when they selecting their settings to trade our EAs. And there we go, and you can see these nice, and here's a particularly good one. Look at this, just one way, just steadily going up and up and up. Equity above the balance line all the time, a little bit of a hiccup once and then straight up again. And this one in fact had a 94% success rate and a really good return on the money. So that is what you're looking for. You're looking for settings that will perform well in any market conditions, and an EA that will perform well in any market conditions. So please watch this video very, very carefully. I'm going to go through a lot of steps that to show you how you get to this particular point. Just a reminder, please go and watch this video first. You need to have the skills and the background to appreciate what I'm going to be doing next. So in the last video, what I showed you is how to get quality data that is aligned with your broker and with the country that you are trading from, or that your broker server is located. And I showed you a bit about getting quality templates, and we're going to go into that in a little bit more detail in this video. So the promise from the last video was that we're going to look at how to adjust the results to reduce the risk. That's what I will show you, and how to forward test the results to see how robust they are. And here is just a little bit more detail about what happened in that previous video. We downloaded a Forex robot. I'll show you how to download it. We tested the Forex robot, make sure that it is running okay. We then created a great testing environment. We created a testing model, a template, and then we ran the testing model, and we improved on those results, and I managed to create a $15 million result from a loss-making EA using those particular steps. So please go and have a look at this video. And then, as promised, in the next video we're going to create lower risk settings. Okay, so let's continue our path to finding the best robot with the best settings, with the most robust settings that work in any market conditions. Right, now this is a week later, and here is the test setup that I used previously, which is the make money pound open prices. We said that the open prices and the tick data was more or less the same, so we're not going to fool around with tick data for a while. And then with the dates are from the 1st of October 2019 to the 30th of September. Those are the dates we used. We said we'd use a 2 pip spread and a 1 hour period, and we are going to be testing using $10,000, and we're using the genetic algorithm, and our inputs will be, and we'll load them. Those are the ones that we created. Here's the set file. There's the set file that turns the 10,000 into 15 million. So I'm going to use that one. I open it, the settings go in here, I click on OK, and then what I'm going to do is run it, and to make sure that the set file is the correct one. And here we go. Okay, there we have our 15 million that has gone in. So let's start the process. Now we have an optimized set file that will generate 15 million for us, but the risks within this trading are extremely high, and the chances of repeating this success rate are very small. And I'll just show you quickly what I'm talking about. There are the ticked items that we have here, and what I'm going to do is I'm just going to do a mock optimization. So in other words, I'm going to start an optimization, and let's have a look at how many options we are going to test. And there we go. Look at these options. I mean, I can't even pronounce that number, but after those zeros there, these are all millions. So these are millions and millions and millions of millions. So your chances of getting to 15 million is a lot bigger than 15 million to 1. It is huge, huge. Your chances are so huge. So what we want to do is we want to get to a lower figure, but a more possible figure. So let's try and do that, and just look at that number again. You can see the odds are highly stacked against us to get to that particular figure. So I'm going to stop this. So let's go and have a look at how we're going to get to a more reasonable set of settings. So here are our settings that we have. Now the first thing I'm going to do is that what these settings say is that you have to risk 5% on every trade when you trade, and the maximum number of open trades is 40. So it doesn't take a genius. If you have 20 negative trades and you're risking 5%, you will blow your account. So the first thing I'm going to do is I'm going to change this to manual lot sizing, and I'm going to go for 0.1 lots per 10,000. So that is the same as 0.01 lots per 1,000. So that's number one change I'm going to make, and that will make a massive change to the results that we are anticipating. And I'm going to untick that as an item to be optimized, because I'm saying I want to go with that kind of figure. Then the next thing that I want to do is I want to say maximum trades open at any one time. Just think about this from a practical point of view. Suddenly there are 40 open trades running all at the same time. It can get pretty chaotic. It increases the risk tremendously, and the way of reducing risk is reducing the number of potential trades that you can take. So I am going to actually reduce this, and I'm going to go for 5, and I'm going to change my optimization to 5, and I'm only going to go to 10. So immediately I have reduced my risk tremendously by firstly going for manual lot sizing, and secondly by reducing the number of possible open trades that there can be. And I'm immediately going to change this to 10 because that's the top number that I'm going to test, but I will re-optimize these numbers. And I'm going to keep that tick because I still want to optimize between 5 and 10. All right, so let's have a look at other areas that we want to optimize. And I'm going to come back to the moving averages because we need to think about those ones. We're going to look at the ADX levels. Those ones we'll have to think about. But I'm just going through the list here, and I'm saying, okay, let's start thinking about this. Do we want to trade with stop losses and take profits that are 200 pips and 240 pips? Remember, this EA trades when there's a confirmed trend. That means it takes a while to confirm the trend. So it might be trending for 120 pips or 150 pips already by the time it starts entering deals. So what are we are actually saying that we're expecting a 400 pip trend before our first entry will be cashed in, and that's a lot of pips for a strong trend. So one of the things that I'm going to do to reduce risk, I'm not going to go for 240 pips. I'm going to say it's more realistic. Let's go for 160 pips. So we're going to go for a trend that's between 80 and 160. So what I'm doing, I'm changing the optimization criteria, and that was 160. Sorry about that. I'm typing left-handed. Okay. The same thing with a take profit. I don't want these massive take profits. I think I'm happy with 160, and we'll go for 10. And we'll go for take profit of 80 would be fine. Oh, I could even go for 60. That's fine. So we're saying we're going to test for smaller take profit numbers, and we'll keep those ticked. And I'm going to change this to the smaller number. I do this because the testing runs on these figures, and I don't want them to be outside of the range that we have in place. Then we say, all right, let's have a look at the trailing stop. So realistically, when you have a 160 pip target, then you possibly want to start trailing a lot. You want to start trading when it's about halfway, or even after it's reached a third of its profitability. So I'm going to say I want to test. Halfway is about 80. I'm going to test from 80, but I'm actually going to test from 30 in jumps of 10, and we'll go to, at most we can go to 150. So now we say, all right, we're going to activate our trailing stops a lot faster, and we're going to trail most probably by a lot smaller. So I'm going to say 40 is the number I have in mind, but let's trail by 20, reduce the gaps, the step sizes, and we will trail by 20 to 80. So in other words, when it reaches 80, it could potentially just be a break-even trailing stop, and I'm not too worried about the steps. The steps aren't going to change the profitability of the EA, so I'm just going to go for 10 there, and I'm not going to optimize that one. So let's move on. The dynamic stop, let's not test that one. Let's just say the dynamic stop, if we put it at 180, it won't work, and that will be fine. The dynamic target, I'm also not going to test that one. Leave that one out, and a 0 is turning it off, and that's fine with me. And we are testing the 1 hour time frame, so we do need to do a time of day testing. At the moment it's set for 3 hours, from 3 o'clock to 2300 hours. Basically it's only missing 4 hours in the day. I'm going to keep it there and see if the next optimization changes things. Okay, so let's have a look. Let's go up now. As I said, let's have a look at the moving averages. What we want to do is we want to catch fast trends. So a trend that we want to catch the trends quite early. So if we're using long moving averages, in other words, moving averages that go over the last 30 candles, they are a little bit, those moving averages are a little bit slow. So I'm going to go for smaller moving averages. I'm actually going to go here from 24. So I'm going to go to 2, from 2 by skips of 1 to 24. And the second moving average, I'm going to do the same thing. So what I'm doing here is I said, I want to get into these trends much faster than before. I don't want to wait for the moving average to be like 200 or something before I get in. So again, I have to change these values to be within the range that I'm testing for the most efficient testing. And then the ADX period, I know from experience between 20 and 40 are the settings for the ADX. So I'm just going to stick with those ones. Those are fine. And the period can vary, and I'm going to go for a very fast period, 2, and I'm going to go up in steps of 2, and I'm going to go to 24. So can you see what I'm doing? I'm trying to set the settings the way I anticipate that I would be using them if I was trading live. Those are the kind of settings that I anticipate, because optimized settings sometimes come up with unrealistic settings for you. All right, so let's have a look. We've gone through those settings. We've adjusted that. We've maximum trades. We've adjusted. We've got some lower take profits. We've got trailing information that's a lot shorter. And so let's give it a go and optimize those settings. So we say okay, and we're now going to optimize those settings. Now remember the number of options, and I'm just going to go, there's 3, 6, 9, 12. So there's 12 figures after the million. So let's just firstly, I'm just going to start the optimization. So immediately we've reduced the number of millions by, now we only have 7 figures after the million. So we've reduced it tremendously. I mean, really tremendous. But thank goodness for the genetic algorithm, it's still only going to test 10,000, and you can see it's testing pretty quickly. And let's go and start looking at some of the results that are coming through. And now the results are a lot smaller. So we'll have a good look and see. Let's wait for it to finish. And that's what we want. We want results that are more realistic. Now, what is realistic? We normally, when I trade a portfolio of balanced EAs, when I say balanced, I have some trending EAs in there, and I have sideways EAs, and each one is trading the best currency for trending, and the other one's trading the best currencies for sideways, and we have a number of those EAs running at the same time. When you have that kind of situation, you're looking at an annual return of between 60% and 100% for that portfolio, because it's a balanced portfolio. When the market's trending, the trending EAs will make profit, but the sideways one might battle a little bit. And when the market's going sideways, the sideways EAs will make money, but the trending ones will not. So that's what I mean by a balanced portfolio. So we're trying to get some more realistic settings for this particular EA. It is taking a while. What I'm going to do is I will let it run, and I'll wake you guys up in about 9 minutes time. It's still got 9 minutes to run. That's quite fast if you think it's processing all those millions and millions and millions of options. I will just before it's finished, I will start the video again, and then we can chat about the results. Okay, we're heading for the end of the test. Here we go. It's about to do it, and it's still running. It's actually running over the number that it's supposed to, but let's let it run, and let's see what the best result is. So there's been a dramatic drop in profitability, and one of the things that we need to look at is whether this drop is acceptable or not. So I'm going to do, it's still running, but I think we've got enough here. So what I'm going to do is I'm going to click on the best result, and I'm going to set it as the new settings. So when we go back to settings, okay, so here are the top results, and again I'm going to highlight them, and I'm going to say set as parameters, and we're going to go into there, and there are the new parameters. The first thing that I'm going to do is I'm going to save them, and I'm going to save them as make money pound conservative settings from October 19 to September 20 on the 1 hour basis. So those are the settings that we have now. We're going to save them, and we say yes, we want to save that, and we say okay. And now I'm going to run them, because if I run them I should get that same number there. So let's run them and just make sure that those settings are correct. Yeah, there they are, 31,000. Now, what it's basically saying is now we've toned it down to only getting a 300% return on our money rather than generating 15 million. Quite a big difference, but again, I think you'll start agreeing with me that we're now toning it down. Now, one of the things that I must mention too is that an immediate way of reducing risk is to use higher time frames. So what I'm going to do now is I'm going to do an optimization using the 4-hour time frame. And if the 4-hour time frame optimization is more or less near the 1 hour results, then I would most definitely go for the 4-hour ones, because longer time frames encounter less risk. In other words, they open fewer deals and that type of thing. So what I'm going to do is that's the only thing I've changed, the 4-hour, and I'm going to optimize again, do another optimization run using the 4-hour time frame. And we're going to start it off, and it will be the same, and it's going to take shorter because it now has fewer candles to go through, and this run is only going to be about 2 minutes. So there's a big difference between the previous one and this run. Because it has fewer candles to go through, it actually has a much shorter run time. So let's sit this one out. Again, I'll just start the video again once the optimization is complete. Okay, the test is complete now, and let's have a look at the best results. I'll just sort them. Okay, and there we are. The best result is 22,900, and again I'm going to just set that as parameters. I'm going to go in there, and then what we'll do is we'll just run it to make sure that those are the correct ones. Yes, there's the 22,900. Okay, so let's have a look at the results that have happened so far. We really went mad, and we went for a percentage of equity with very wide ranges, and that took $10,000 to $15 million. The drawdown, now here's where the big thing comes. The maximum drawdown was almost $3 million. So imagine yourself trading away, and suddenly you hit a $3 million drawdown. What would you feel like? Put yourself into that position realistically. and you can see that these settings are really very dangerous settings. They're unlikely to repeat, and the drawdowns are amazingly big. Then we went to a 1 hour conservative time frame. We did an optimization. 31,000 was the result. The drawdown has dropped not only in percentages, as a percentage, it's 11%. 4,000 is still a lot of money, but it's a lot less than $3 million drawdown, and we have there a success rate of 74%. Here we've got a success rate of 60%, still okay. I think the drawdown figure is where the psychological side comes in. And then we went down to a 4 hour time frame, and the drawdown in terms of dollars actually reduced even more to 3,600, and although the profitability in terms would drop even further to 55, the return was pretty good. So the object of this video was just to show you that sometimes these settings are incredibly dangerous, very unlikely to repeat. These ones are more likely to repeat, and this one, and that should be 4 hour conservative, this is the 4 hour, is most probably the most conservative and the most likely to repeat settings. Okay, so we got that report out for the 4 hour. Now let's go and have a look at the equity graph, what it says. Basically it's saying growth period, sideways period, growth period, sideways period, growth period, quite a big one, sideways period, growth period, sideways, and then growth period. So when you look at the equity charts, you have to also put yourself in a position. This is a year's trading. Would you be happy to go sideways for 5 months of the year? There's sideways for 3 months of the year. Sideways most probably for 2.5 months of the year. That type of thing. That's the nature of this particular EA. It only makes money in a confirmed trend, and the confirmed trends only happen maybe once, twice, 3 times, 4 times, and 5 times a year. So that is the nature of this particular EA, and this is also why I encourage traders to use a portfolio approach where they're trading sideways market EAs that make money in sideways markets, and they also trade trending EAs that make money when there's a strong trend. So that way you smooth this equity chart. But you have to, after doing these runs that we've just done there, you have to look at the graph to see what kind of equity chart you get. So let's go and save these settings. Save them. This is the 4 hour. So I'm just going to use that one and change that to 4 hours. And I'm going to save it. Then what I'm going to do is I didn't look at the equity chart for the 1 hour. So what I'm going to do is run the 1 hour very quickly and look at the equity chart. Change that to 1 hour, and then we run it again. And there's our 31. So let's have a look at the equity chart on this particular one. Okay, there we are. Now this equity chart has only 3 growth periods during the year. There's that period, and then it just went sideways. Then there's that period, and then it just went sideways. Then it's that period. So again, we have this EA that's a fantastic EA. It generates really good income and results, but you psychologically need to be fine with sitting around for maybe 6 months while it trades sideways before it jumps up again, and that type of thing. Now it takes exceptional traders to be able to do that, and that is why you have to trade this kind of EA as part of a portfolio of EAs where at least your sideways market EAs are making money while your trending EAs are sitting around waiting for the trends to happen. Before that, I want to just quickly change the dates here. So I'm going to run the next 3 months on these results. So we go we're going to go from the 1st of October in 2022, 1st of October, and then I'm going to run them till December 2022, the end of December. So that's a 3-month period. Let's just run these 1 hour conservative settings for that period and see what results we get. Okay, so now we've got a negative result, which shows you that although we've gone and done all this optimization work that we've just done, if we had then on the 1st of October said, look, we've done all this optimization, let's run with these settings, they have resulted in a negative result. And let's just have a look at the chart, and you can see terribly not the greatest results. Then let's have a look at the 4-hour results, and we're going to load the 4-hour results. There's the 4-hour ones. We'll open them and we'll run those 4-hour results for that particular setting. Now remember that this one had a $4,000 loss. Let's see what the 4-hour would have had. And this one would have had a 1,200 loss. So what we are saying again is that optimization has its limitations. We can't rely on optimized settings for the future. There's certainly uncertainties, and here hello. Okay, now this shows you that the 4-hour settings carry a lot less risk, and the result is not that good. And also you can see on the chart there are some growth periods that have happened, but overall those settings wouldn't have helped us in the next 3 months. So let's go and do the same thing for the $1 million, the $15 million settings. So we go load, and there's our $1 million, and we open it up and we say okay, and we're going to run the settings for that period, for the next 3 months. Let's see if we become millionaires. No, we blow our whole account. So optimization has not answered our question about which settings are the most robust and the most reliable to use. Unfortunately, history is all we have to look at to base our future decisions on. So in the future video, I'm going to discuss what we do from here. All 3 of these alternatives have not worked out very well, but certainly the 4-hour one has shown a reduction in risk by using the 4-hour time frame with conservative setting. So if these results have left you with confusion and disillusion, that is in fact the reason for this video. I want to show you that optimized settings are not necessarily the best settings to run with for future trading, and that is a problem that Forex robot traders face. They have to find settings that are a compromise between optimized settings and settings that are based on other factors. And I'm going to be addressing that in future videos. Okay, so remember, this is the goal of this whole exercise. We are going to be finding the best and perfect robot that is robust in any market conditions as shown on the screen there, and now and then we'll have a bit of a hiccup, but not too serious, and we'll continue. That's the kind of robot we're looking for. And in the next video I'm going to be showing you the process of finding those kind of robots. Now what I've shown you so far is the typical process that most Forex traders use, and you can see where it heads. We have loss-making accounts in the next 3 months. We have loss-making accounts trying to use the same settings as the 15 million settings. So those are not the most ideal ways of finding settings. They can work if you're lucky enough to encounter ideal market conditions in your next 3 months or the next period that you're going to be trading the EA. If you're lucky enough, that's you'll find that. But it is more important to find settings that are robust, like these ones over here, that trade well in any market conditions. Now, I must just remind you that these equity charts that I've shown you here are all from our existing EAs as well as future EAs which we'll be making available to our clients, like the ADX trader and so on. So they are already available. They are there. I'm not quite sure why people aren't finding these settings, but I will certainly show you how to find them in the next video. So watch out for that one. So from me, Alex Deploy, cheerio.